Thank you, Rohit. Good afternoon, everybody. Welcome you all to our earnings conference call for the quarter and the year ended 31st March 2020. Joining me on the call is Mr. Paresh Mehta, our CFO. I hope you all are staying safe and healthy during these unprecedented times. To start with, I will initially brief you on industry updates, followed by company's performance during the year and other company developments. The current financial year has been challenging for the infrastructure sector. Delayed appointment dates, due delay in land acquisition by NHAI, coupled with prolonged rains, has impacted execution during the year. Further outbreak of COVID-19 pandemic has created the short-term disruption in the sector. Construction activities came to grinding halt amid lockdown across the country. It has impacted the business operations of the company. From the last fortnight of March 2020, by way of disruption in construction activities, closing down of toll plazas, supply chain disruption, unavailability of labor, etc. due to the nationwide lockdown. However, partial resumption of construction activities have commenced at the project sites and tolling activity has been resumed at almost all the toll plazas while ensuring that all safety measures set out by the government are being adhered to. Presently, we are operating at 60% operational efficiency and expect gradual ramp up in coming times. Labor availability at site today is between 50 to 65% of the required workforce and expects to reach normalcy in near future. On BOT projects, within 3 weeks of resumption of toll, we have reached around 85% pre-COVID toll collection levels. We expect the same to come back to normal in coming months with the overall revival of the economy. The revenue and profitability has been impacted and will be impacted for Q4FY20. We expect business to be near to the normalcy in 3 to 4 months. We have made a detailed assessment of our liquidity position and do not foresee any challenge in servicing the debt in near term. During the year, tendering and awarding of projects of NHAI has been subdued, primarily due to lower government spending and delay in land acquisition. With improved scenario in terms of land acquisition and availability of funds, the awarding activities started to pick up towards the end of the year. Furthermore, the ordering activity has impacted on account of the nationwide lockdown. Huge order pipeline was deferred due to the outbreak of COVID-19. We expect a higher awarding activity in the near future. With the view to provide required support to the sector during this challenging time, central government have come up with various slew of measures, like allowing 3 to 6 months of extension of the project period in addition to the existing contract period, releasing due payments within the stipulated time frame, releasing pro rata bank guarantees for the value of extent of project work is completed, allowing moratorium period for the repayment of loans and deferment of interest payments, reduction in interest rates, allowing grace period for payment of government duties and taxes to aid the liquidity. We believe these measures will provide urgent relief in view of prevailing situation of COVID-19. Over the years, road infrastructure has been a key government priority. To give further impetus and to address the various funding issues in the infrastructure sector, the Government of India has introduced National Infrastructure Pipeline, an investment plan with an outlay of 111 lakh crores, in which road sector constitutes around 20 lakh crores, which is a record highest beneficiary in National Infrastructure Pipeline. The NIP outline around 1820 projects with a length of 89,000 kilometers to be implemented by 2025. In the road sector, the projects include construction of new expressways such as Delhi, Mumbai, Bangalore, Chennai, and so on. Also, to accomplish government ambitious Bharatmala Pariyojana Phase 1 in the stipulated time, we expect awarding activity to boost significantly going forward. Now, coming to the company's performance during the quarter. Order intake during the quarter, we won Tumkur-Shivamogga Package 3, which is a HAM project, worth 1036 crores from NHI in Karnataka under Bharatmala Pariyojana. Also, we signed concession agreement for the project. With this, we have signed the concession agreement for all HAM projects, all three HAM projects, which we have won in around 1 year. Currently, we are in the process of tying up the debt for the said project and expect to do the financial closure in near term. The company's total order book as on 31st March 2020 stands at 8,379 crores. The order book excludes Tumkur-Shivamogga Package 3 worth 602 crores. EPC agreement for the same was signed in May 20. Including this order, the order book stands at 8,981 crores. The breakup of the order book is as follows. Road projects comprise around 6,717 crores, which is 80% of our order book. Among the road projects order book, HAM projects are to the tune of 4,324 crores and EPC projects are 2,393 crores. Power T&D and others comprise of around 699 crores, which is 8.3% of our order book. Railways contribute around 903 crores, which is 10.8% of our order book. And our CGD order balance is around 60 crores. Moving on to other key developments. I'm happy to share that our subsidiary Ashoka Concessions Limited, SPV Ashoka Kharar Ludhiana Road Project, received the COD on March 31st, 2020. The SPV is eligible for receipt of annuity payments from NHI within the 6 months from the date of achievement of COD. Also, the SPA has issued a provisional completion certificate for completion of 93% length. That is all from my side. I would now request Mr. Paresh Mehta to present the financial performance of Q4FY20.
Thank you, sir. Good afternoon, everyone. The result presentation and the press release for the quarter have been uploaded on the stock exchanges and on the company's website. I believe you all had an opportunity to go through the same. Now I would present you the financial results for the quarter ended March 31st, 2020. Starting with the consolidated results, the total income for Q4 FY20 stands at 1,609 crores as compared to 1,624 crores in Q4 FY19. The revenues which were slightly impacted due to the nationwide lockdown imposed by the government to control COVID-19. EBITDA stood at 499 crores in Q4 FY20 with a margin of around 40%. Now coming to the standalone numbers, the total income for Q4 FY20 stands at 1289 crores as compared to 1345 crores in corresponding quarter last fiscal. During Quarter 4 FY20, BOT division recorded a toll collection of 228 crores. EBITDA for the quarter was at 264 crores as compared to 220 crores in corresponding quarter last year. EBITDA margin was at 20% for Q4 FY20. The company reported profit after tax of 164 crores in Q4 FY20. A PAT margin stood at 12.7%. Total consolidated debt as of March 31st, 2020 stood at 5,676 crores, of which project debt is 5,276 crores, which includes 150 crores of NCDs at ACL level. The standalone debt is rupees 400 crores, which comprises of 231 crores of equipment loan, 169 crores of working capital loans. During the quarter, we have made the payment towards redemption of 150 crores of NCDs. With this, we now open the floor for question and answers. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Mohit Kumar from IDFC Securities. Please go ahead.
Yes, sir. Good afternoon, sir, and congratulations on a good set of numbers. I understand it's difficult to forecast or give any guidance at this point of time for FY21. But, sir, can you just comment on how the Q1 is coming up and what is your expectation for the rest of the year? And when we expect the normal revenue to come back? And secondly, sir, on the asset monetization, is there something which you can guide right now? I do understand this is difficult, but having said that, is there something which you think can be done over the next 5 to 6 months?
If you look at Q1, if you see my April has gone completely entirely into lockdown, certain activities have picked up to the level of 30-35%, and now activity has gone in June up to 60%. So Q1 we don't expect more than 50% of the last Q1 when you compare. And overall year's guidance, we are hopeful July onwards, entire normalcy should come, or maybe in August, and we should be able to catch up almost the same numbers as last year. So you may not see any growth this year.
Okay, so we are not expecting any growth, am I right? For the FY20?
I'm not expecting growth in this year because 2 reasons. One is the balance time includes the monsoon. So we'll be left with only 2 quarters to really perform.
Right. Speaking of asset monetization, if you can comment to?
Asset monetization was in advanced stage, but after the lockdown and this COVID-19, it's under hold. So they'll come back to us when they see the normalcy. And now since we are seeing in toll collection almost 85% of the toll has come back. So maybe another month's time or 2 months' time, we will restart the negotiations.
Okay, so my last question, sir, is there how's the work progressing on the UP Expressways? Has it picked up? We have heard a lot of positive news on the press. Is there something which can contribute significantly in the H1 FY21?
Yes, on Bundelkhand Expressway, the work has begun and the pace is also very good. We're almost to the 80-85% of the pace has come back.
Okay, understood, sir. Thank you, sir. Thank you, and best of luck.
Thank you. The next question is from the line of Parikshit Khandpal from HDFC Mutual Fund. Please go ahead.
Yeah, sir. Congratulations on a good set of numbers, sir. So my question was on the liquidity release which we are expecting. We had briefly touched upon it earlier in the call on the partial bank guarantees being returned, and then there could be possibly a monthly payment on hand. So what kind of relief on overall basis on the liquidity side we are expecting to get this year? If you can quantify it in terms of like...
The overall attitude of NHI and MOD to support the system by paying fast. So whatever dues were there were paid at a very fast pace. We have received payments in April, we have received payments in May. Government is very positive of bringing liquidity to the sector. Various reforms and circulars which have come for releasing of retention money, so we have made applications, but till date we have not received anything.
So can you quantify the retention money lying with NHAI as of now? And how much we have made the application for return?
Detailed numbers will give you.
Okay.
Projects are at various stages. They look at completion of the project, and if substantial completion is done, then substantial retention money gets released.
Okay. And just, Paresh sir, if you can touch upon the one-offs which have, because margin for this quarter looks to be very high. So if you can then touch upon any one-offs during the quarter and what kind of provisioning we have done in this quarter so that we can understand the results better.
The margins are looking very robust. One of the contributions are basically quite a few projects in the power as well as Khara, Ludhiana and Anasalam have come to fag end. So there's some release of contingencies which were provided for got released in the revenue side. So that got accounted, and also certain additional items which were to be executed for of good margins have also been has contributed to this. So release of contingencies, release release of escalation provisions, and these certain change of scope items which were executed have contributed to this increased margins.
Okay. So if you can quantify it, like how much was the amount, if it be helpful to understand the margins better.
So these amounts would be in the range of approximately 100 odd crores.
Okay. Okay. And just last thing on the liquidity side, sir, earlier you said that we have done a detailed assessment of the liquidity and you feel comfortable at this position and even NHI is supportive. So any specific reason why are we looking to raise funds and basically dilute equity at the current levels?
So the decision of raising funds was made in just before the COVID set in, like when it was in the process set in. But we believe that we had a already last whole year we had a NCD of 150 crores. We thought which we paid off in March, and in case whenever required we would raise. So that one of the reasons of raising any debt instrument in the market, depending on cash flows. So in case new projects are coming in, if equity is required, then if need is required to fund that equity, it's an enabling provision. The provision for the resolution is more of enabling. So otherwise liquidity is still comfortable in lieu of the RBI benefit which was given for all the toll projects, moratorium and deferment of interest. So that also has helped in probably releasing the liquidity pressure, if any.
Okay, sir. Thank you. That's all from my side. Yeah, operator, I'm done. Yeah.
Next question is from the line of Ashish Shah from Centrum Broking. Please go ahead.
Yeah, thank you. Sir, a couple of questions. One, what was the exact appointed date for the Bundelkhand Expressway?
I think around 15 Jan.
Around 15 Jan.
Yeah.
Sure. Sir, secondly, on the Tumkur-Shivamogga packages, if you can just update on the package 3 as well as package 4 on the FC and the appointed date, land status. So by when can we expect that you'll start getting some revenue out of these two packages? And the Kandi Ramsanpalle as well. I mean, where are we in terms of the land there?
The new HAM projects.
Yeah.
The new HAM projects, basically, we were supposed to do FC by June end, but now it will be done by September end because banks were not functioning all along April and May on any of this financial closure works. So anyway, we are getting extension of 3 months because of COVID. So we should be able to start work in October on all the three. And land acquisition position, Kandi Ramapale has a 93% of land already in place. Package 3 of Tumkur-Shivamogga has 89% land in place. Only package 4 has only 64, but we expect by September end, they should also be 80 plus.
sir, all this is 3H, right?
All this
3H
is
or
3H.
3G? 3H.
Now this is all 3H.
Right. Fair enough. Sir, also on the cash balances that I see, so standalone cash balance was about 291 crores, and on a consolidated basis it is 754. So if I see the difference, I think the difference is almost 460 crores, and this is the highest that we've seen. So any particular reason we are holding so much cash in the subsidiaries? Is it meant for some capex commitment or something, or the cash is actually available to us to be used? If you can just help clarify that.
Yeah. So, in of the 754 crores which you see in the consol number, of which 300 crores is Ashoka Buildcon standalone cash, which is almost 240 crores is almost free cash. 60 crores are cash balances which are leaned for bank guarantees. FD has leaned for bank guarantees. Now, when we come back to the other SPVs which are holding cash, there were payments which are received in a couple of SPVs like Karar, Ranasalam, and Belgaum, where cash was almost 150 crores of cash was lying as of 31st March, which later on got transferred as EPC payment to Ashoka Buildcon. So from that perspective, that cash, 150 crores was cash has finally come back to ABL. And then there are cash which was created for projects like Bagewadi Ongul, where requirement of DSRA and MMRA is a requirement as per the contract. And because these contracts got over in last year, this reserve buildup is required. Now, this has been created in the form of FDRs. So, Mudhol, Nepani, Bagewadi and Ongul. And we already have certain cash in Jaora Nayagaon of around 60 odd crores, which is cash accumulated over the period of time.
Okay. Just lastly, so given the moratorium that you would have received and given where the toll collections are, any estimate you have of the loss funding that might be required, any shortfall funding that might be required this year in the BOT projects?
So as of March, we had paid all the interest and principal. For the balance 6 months, we will be paying the interest because there is only a deferment of required. And principal amount installments have been moratoriumed for permanently for 6 months over the additional loan period. So from that perspective, we believe that ACL as a holding company will manage its cash flow internally, because we'll have certain surplus at Jaora Nayagaon, which will take care of any cash shortfall at projects like Sambalpur, which generally is still requiring cash. So overall, we will be cash neutral within the portfolio.
Sure. So no incremental support from Ashoka is what you are saying?
Yeah, effectively no.
Sure. Thank you. Thank you very much. Yeah, I'm done, operator.
Thank you. The next question is from the line of Vibhor Singhal from PhillipCapital. Please go ahead.
Good afternoon, sir. Thanks for taking my question. So just to harp on what where Ashish just left. So basically, if I'm were to understand correctly, at this point of time for all the SPVs, we are not availing any waiver or deferment of interest. Only the principal is being deferred, which will add up cumulatively to the debt number at the end of the financial year.
Yeah, so the deferment of interest we are availing to the extent of whatever is not payable during the intermittent periods, like suppose for month of April, we hardly collected 8 days toll. So that is being used for interest payment, but balance is being deferred till whenever cash flow is created. So first application of the money will be towards interest payment, and then the principal amount will definitely be deferred. So that balance will remain for servicing of the project throughout the year end.
So the interest that we are deferring, so let's say the interest that in the month of April that we deferred and also in the month of May, so will that be basically a part of cumulative interest that we pay towards the year, or are we looking to use the provision to convert that into an FITL as the ministry has suggested and then increase our debt overall?
At this moment in time, no. I think so. The cash flows of the SPVs will be sufficient to pay off the interest, and because there is no other application for that money, it will be used to service their debt. So we don't want to increase any debt unless it has any alternative use. Because SPVs are escrow managed, money will be used for servicing the debt, first interest and then principal, if there be any extra left.
Sure. And all this will, just to repeat, all this will easily be managed without any support from the parent company.
Yeah, because JTCL is already creating surplus.
Right. And sir, at the parent company level, are we looking to avail the moratorium? Either have we availed it or are we looking to avail it at some point of time, or no, we are happy with the way things are at this point of time?
At the parent company, we don't have any long debt.
Right.
So except for equipment loan where we have not opted because it is a small amount and our cash flows are easily supporting it. So we want to remain as disciplined as possible and maintain the cash flows which is required, not to defer anything. And cash flows being so comfortable, I think so the parent is not required. We do have opted for additional loans, CC 10% of CC loans from the bankers, existing bankers, but we'll be using them only when we require them. Presently, we are cash surplus.
Sure, sir. And also, sir, on the payments from the debtor side, we saw the debtor numbers in fairly good control. So, any place or any specific segment or the state where you are facing some payment in delays, either let's say in the month of either at the end of Q4 or as of now where we stand in Q1?
See, in most of the sectors, the road sector, as our MD has already suggested, that has told that payments have come very comfortably from NHI or MORTH. On the power side, some challenges at the UP project, but otherwise, there's a reduction in the debtors in the last year. Almost
right. 100 crores. Right, sure, sir. Lastly, sir, just I think I missed that part. You mentioned something on that Macquarie deal that have the conversations with potential buyers begun again, or are they looking to, let's say, wait for the traffic to stabilize and only then will the conversation start?
Yeah, basically, as Sir has said, as soon as the traffic comes to normalization, the potential investors will start again. We start discussing with the potential investors again. Of course, other investors are also interested in looking at the portfolio, so that options will be kept open. But the existing potential investor who has already done diligence will definitely would like to start discussions as soon as he sees comfort in the traffic.
So as of now, but there are no discussions which are going on, right?
Yeah, I mean there is a hold now at this position.
Yeah, sure. Great, sir. Thank you so much for taking my questions, and I wish you all the best.
Thank you. The next question is from the line of Ankita Shah from Elara Capital. Please go ahead.
Yeah, hi, thank you. Sir, you mentioned that the FC for the 3 HAM projects to be completed by September. So when are you expecting the appointed date to come through for these projects? Will it come in this financial year?
Yeah. The appointed as soon as we complete the FC, so we intend to start the projects by October.
Okay. So it's delayed only because of the current situation. That is the reason.
Particularly 2 projects because of the current situation, and package 4 because of land acquisition, which will happen up to September.
So 2 of the 3 projects should start by October, right? The third one will still take time, right?
Third one also we expect to start by October.
Okay, all 3 of them. Fine. And sir, there are a couple of projects, operational projects where you take toll rate hike from 1st of April. Did we manage to take this time, or it's delayed now, and will it happen this year?
All those toll rates have already been given.
So you've taken toll rate hikes?
Yeah.
In the similar range what you took last year?
Yeah, around 3.5% to 4%.
Okay, from 1st of April. Okay. And sir, how is execution on railway projects panning out, and are there any more opportunities on that segment?
Yeah, railway, the pace has now picked up, and Punjab, Bihar and Jharkhand, all 3 projects now pace has picked up. And new projects, no clarity yet whether they are differing investment or projects around 8,000 crores of projects were lined up in coming 2 months, but we are not sure whether they'll see the light of the day.
And payments?
But payments are being made in time in railways.
Okay. And sir, any equity requirement numbers, for this year, next year, and how much is total invested in all projects put together?
So, not very much incremental equity requirement in the last quarter, but 2021 overall equity requirement would be approximately 300 crores. And the next year, it would for 21-22, it would be approximately 130 crores. Some deferment would happen for 2021 to 21-22. So overall, till date, we have up to March 20, we have put in the existing HAM projects approximately 650 crores.
HAM projects only.
Yeah, HAM projects.
Okay, sure. Thank you. So you were saying something, sir?
Yeah, 650 crores, including the annuity projects also of 140 crores. So you may take approximately 500 odd crores for the HAM projects, specifically NHI-based HAM projects.
Okay, sure. Thank you so much, sir.
Thank you. The next question is from the line of Jiten Rushi from Axis Capital. Please go ahead.
Yeah, thank you, and sir, all congratulations on good set of numbers. So my question is regarding the revenue breakup between power, road power and railways for Q4 and FY20, please.
So for the Q4, the road revenue was 980 crores. The power was 137 crores.
Okay.
And, the railway revenue was 90 crores. This is a basic major.
And
on a
and for the full year, sir?
On the cumulative basis, the road revenue was 2,975 crores. The power segment was 475 crores. And the railway sector was 210 crores.
210 crores for railway. This is for the full year, you're saying, right, sir?
And then there's certain miscellaneous turnover of CGD and others of around 100 crores.
100 crores. So this is for FY20, right, sir?
FY20.
2,975 crores. 2,975 crores is for roads, 475 power and 210 railways, and 100 is CGD.
Correct.
Right. And sir, can you give me the breakup for the unbilled revenues and the mobilization advance as on March and retention money as on March, and what is the additional mobilization advance we are expecting this year, sir?
So mobilization advance for March end was approximately 390 odd crores. And what was the other question which you asked?
Sir, unbilled revenues and retention money as on March, and mobilization advance expected from new projects this year.
Just get back to you. Unbilled revenue was 367 crores.
367. And retention?
Retention, I would not have it offhand.
And sir, how much mobilization advance we will expect now from the newer project this year?
Pardon?
How much additional mobilization advance we are expecting this year? Because now 3 projects start, right? The HAM projects. So
the 3 projects, Kandi, Betadali 1 and 2, 3 and 4. Approximately 300 crores. Around 300 crores.
All 3 put together, right, sir?
And for Bundelkhand, another 58 crores.
Bundelkhand is 58. Okay, Bundelkhand 58. So, sir, this 300 crore is for only Kandi, the Tumkur, Shimoga, 3 and 4, any mobilization advance? Hello?
Yeah, can you repeat the question?
Sir, my question was like Bundelkhand, I think 58 crore is pending, and then there are 3 HAM projects of Tumkur, Shimoga package 3 and 4. Achha, and one is Kandi. So I was asking how much for these 3 HAM projects together?
Together 300 crores for Kandi, TS4 and TS3.
Okay, got it. So 3 HAM projects. Okay. And sir, the last quarter, in the call you had said there were some receivables which were pending for the power T&D projects, and that was around big number actually. If you ask me, like you had said some 500 to 600 crore were pending from the power T&D projects. So now, what is the outstanding overdue from power T&D as on March, or anything we have received in Q1 so far?
In this 2 months, we have received around 70 odd crores. The total outstanding is around 689 crores in the power sector as of FY20.
And of which we have received 70 crores, so almost 620 crore is outstanding.
Yeah, it will come in over a period of time. And again, then there will be some advance also received, approximately. And you had asked for a retention amount, that is approximately 195.
Yes, sir.
195.
So these receivables in power T&D usually takes how much time to get, like in the normalcy? Like?
They should, because this good billing has happened, so they should come post this COVID impact, should come by 3 to 4 months time. All these projects, once they stabilize, I think so they should come in.
Usually 90 days to 120 days is the billing cycle for power payment cycle.
Payment cycle generally is 5 to 6 months.
Okay, sir. That's it from my side. Thank you and all the best.
Thank you. The next question is from the line of Charanjit Singh from DSP Mutual Fund. Please go ahead.
Hello, sir. Thanks for the opportunity. So if you can just help us understand now going forward in terms of the working capital, how do you see the requirement, and do you see some kind of elongation in the working capital cycle? What's the view on that?
Our major constituent of the order book is 80% is roads. So at the present turnover of 4,000 odd crores which we have achieved this year, and next year also, as we have indicated, probably we'll try to achieve 1x. I think so. Working capital requirement at this level should be sufficient to take us through this year as well as 2021 as well as 21-22.
Okay. And so from the prospect perspective, there are 3 different sectors which will be targeting. One is roads, and then power T&D, and maybe to railways also to some extent. So how do you see the tender flow can start coming in, or you think that it could be only in the second half that things can only pick up? What could be the scenario on the order inflow perspective pipeline?
See, as far as roads are concerned, NHI MOT is ready with bids of around 70,000 crores. So this is a good pipeline which we'll see in the next quarter. Already dates have been announced for 70,000 crores of projects. Then there are states like UP which are coming up with a huge mega project of Ganga Expressway, which is around 30,000 crores. So we also expect to participate there and win something. As far as railways is concerned, there's not much of a clarity. Around 8 to 10,000 crores of works were ready, but whether they will be bid out in immediate near future, there's not much of clarity. Power distribution also, we are not seeing much of bidding activity to happen in maybe next 1 or 2 quarters.
Okay.
So overall, we expect around to bag orders around 5 to 6,000 crores, state as well as NHI.
But don't you think that states now with their fiscal position, they may not go in for the new project ordering? And already we have seen, some reports coming from UP that they want to, stop any new project or just focus on the existing project completions.
Since they are in very much an advanced stage of land acquisition, we feel that they are likely to come out with the Ganga Expressway.
Okay.
A lot of money is already spent on land acquisition.
How is the funding for this particular project?
Presently, we are not seeing any funding shortfall on our current Bundelkhand Expressway. They have been paying very much in time. And this is all state funding which is happening.
Mm-hmm. Okay. Okay, sir. So thanks for taking my question. That's all from my side.
Thank you. The next question is from the line of Dhananjay Mishra from Sunidhi Securities. Please go ahead.
Yeah, hello, sir. Very congratulations on strong operating performance. You said current activity level across the project is 20%, right? Or 50-60% of normal?
In June, we have almost reached 60% now.
60% activity level as well as labor availability, right?
Right, both.
And we are expecting things to normalize by August, September, maybe. We can reach to...
by July end, we should cross 75% because labor are now started returning. There are signals given from them if transportation is arranged, they are ready to come back. So as soon as little movement starts from the state government side, we'll start getting the labor force back. So July will reach, but July, August would be monsoon season. So even though labor comes, the activity will remain depressed as it is there in industry in Q2. But Q4 should be completely normal.
And so regarding this arbitration award, have we received the money of 200 crore which we own, or it is still pending?
No, we haven't received any arbitration award money in last.
Okay. So when can we expect this money to be received? Any timeline or any indication you have got?
We are going for conciliation process with NHI, which will happen in this quarter. So if NHI and concessionaire, if we are able to reach to certain figure, then monetization will happen fast. Otherwise, we'll have to approach courts and then it may take its own time.
So this 75% immediate payment rule is not, happening as such. Even if
75% rule is there, but then banks this is against bank guarantee, and banks are giving only on almost equal amount of deposit, so it doesn't really help.
Okay.
Liquidity. Yeah. So it's better to reconcile and get settled so that the money comes in without bank guarantee.
Okay. Okay, sir. Thank you. That's all from my side. All the best.
Thank you. The next question is from the line of Anupam Gupta from IIFL Securities. Please go ahead.
So just wanted some clarity on the monetization deal which you are trying to do. So on two aspects. First is for the BOT projects, are you seeing do you expect any correction in valuations because of the traffic impact expected because of COVID? And secondly, on the HAM, because of the difference in the interest rates, which is hurting the returns, will that also play a role in the overall valuation which you may get for the portfolio?
So on the BOT projects, what we understand is we'll get compensated for at least the lockdown period and certain further period. So that will not destroy the value for that extent. Second impact of the COVID is probably some growth impact, which probably some today or tomorrow will get evened out. So a small correction could be a possibility from the potential investor side, but we don't think so. We'll probably push for a not much correction in the price because everything will get factored as today or tomorrow. It's a matter of time. And if you ask from the HAM perspective, interest rate, the bank rates have definitely gone down by more than a percentage in 1 year's time. But bankers, the lenders have typically yet to pass on that. They've hardly passed on 15 to 20 basis point. But we believe that they will pass it on over a period of time. What happens is from a valuation perspective, the valuation of any HAM project sale which are existing in the market, the structures which are available, is typically on the date of the COD, what are the bank rates and the lending rates, which will define the value of the project. So I think so we should, today we don't have to freeze on the value. We can freeze on the structure, but the value can be defined by the bank rate and lending rate at the time of COD.
Okay, understand. And secondly, this question on the EPC business. So obviously this quarter margins were pretty healthy because of the one-off which you mentioned. But let's say next year in a normal scenario, so if you leave let's say April, May when there were no revenues and you still had costs, in a normal scenario, will that 13-14% margin still doable, or that is under risk because of the flat revenues?
We will be able to achieve 20 to 13% on the EBITDA margins, and including other income would be in the range of 30 to 14%. Should not be much of, maybe 0.5% hit of due to COVID is overall possible, but otherwise, ex-COVID, I think so the impact will continue. There will be no impact on that.
Okay, understand. Thanks a lot. Yeah, I'm done. Thank you.
Thank you. The next question is from the line of Chena Avinash from Spark Capital. Please go ahead.
Sir, can I know the capex that was done in FY20 and the guidance for next 2 years? Capex done on in FY20 and FY21-22 guidance, capital investment.
Capex in FY20 in ABL, in the form of machinery and other, were around 83 crores. And for FY21, we would be in the range of around 50 odd crores, new machinery.
Okay. Will it be the same in FY22 as well, sir?
22 will depend on how new projects also come in and how these projects take off. I mean, coming through.
Yeah. Sir, next question is, you have addressed the order book sector-wise. I just want to know any active tenders that you are pursuing right now from NHAI, which will flow in the next 1 to 2 months?
Yeah, as I said, by August end, they are bidding out around 72,000 crores of project, NHAI and MoRTH together.
Okay.
So majority is NHAI, 90% of it is NHAI projects. And this includes EPC as well as HAM projects.
Okay. Do you have any preference over HAM or we'll continue the same way like?
Yeah, we are basically EPC and HAMers. Both are what we bid.
Okay.
We participate equally. It all depends upon selection of a project from site perspective and execution perspective. Yeah.
Thank you. That's it.
Thank you. The next question is from the line of Prem Khurana from Anand Rathi. Please go ahead.
Yeah, good afternoon, sir. Thanks for taking my question. So I had 3 questions. So first, if I were to begin with, so recently we released our financial results for Ashoka Concessions, the disclosures that you gave out as a part of your NCDs which are listed. And what I realized is there's an exceptional item around 155 odd crore rupees, and the explanation says it is impairment in value of investments that have done in set down subsidiaries. Would you be able to give us the names and which all subsidiaries would we have provided for? 155 crores would reflect which all subsidiaries?
See, how it happens is at the 18 level, there is an investment made, and based on the amount invested asset-wise, this impairment has triggered. Overall, the portfolio does not have a trigger. Some values, some are far above the cost of acquisition, and some are below the cost. The sum of below is the total is around 155, majorly contributed by some.
Major. And sir, just to understand this better, we've given out our console numbers for Ashoka Buildcon. So why is it not reflecting as a part of our console numbers? Or is it that, the net worth, since net worth is already deteriorated because of the losses that we would have booked over all these years, which is why we were not required to kind of have it as a part of exceptional item, which is because it is already taken care of as a part of your losses that you booked in the earlier years.
Exactly. That's right. The assets have been depreciated on a yearly basis. So from that perspective, there is no difference. There is no impairment.
And this 155 would include the impact for the traffic disruption that we would have seen because of COVID, right? There won't be any incremental provisionings that you would have to do.
Yeah, as of date, we don't believe that anything as quarter is required has been impaired.
Sure.
So,
Okay.
for
And so,
coming we did not require anything of that kind.
sure. And so would you be able to give me the breakup in terms of the debt breakup in terms of how much is it for hybrid annuities and how much is for other operational assets?
On the overall side, probably I don't have a breakup. That is 5,600 is the total debt on the project.
Okay.
Legally is on HAM and annuity project only. Nothing more. Of course, BOT project also there. So I have to give you a specific breakup.
Sure, I'll take it offline, sir. And just one last, if I may. I mean, Tumkur Shimoga package 3, our EPC size is around 600 odd crore rupees, but when I look at the BPC, it's around 1,035. So which gives me a number around 60% EPC as a percentage of BPC. When I look at, I mean, these figures of some of our peers, I mean, generally we don't get to have this big a difference. And at least for us, I mean, when I look at all the Tumkur Shimoga packages, I mean, it's been anywhere between 60 to 67 odd % of the BPC. So I understand a part of this would be explained by IDC, but what would you attribute the remaining part to?
So the remaining part of maintenance is also there in the BPC.
Oh, okay. So during the construction, the maintenance that you do is again a part of this.
Right. And it varies from player to player as how they estimate and build for maintenance.
No, but I always thought, I mean, the O&M that you do during the construction is also given to Ashoka Buildcon. So that again needs to come as a part of EPC only, right?
Yeah,
Or you're keeping it with the ACL only, and which is how you generate some money in ACL to be able to meet obligations there as well.
Yeah, so the O&M contract for this project is still not given to ABL. Right? It will be given in due course.
Okay.
The 602 is only the concession cost, and this 602 is typically the net cost. So if you add 12% GST, it is approximately another say 85 crores. So the project cost of 1300 perspective is almost 700 crores.
Oh, okay, okay. And just one last from my side, sir, I mean, if you could help me with, so Kharad Ludhiana is now complete, right? I mean, we already have PCOD in place, and we would soon start receiving annuity. So I'm sure you would have already started some dialogues with your bankers to be able to kind of get the repricing done. So any indicative rates that you have in mind for the repricing that you would be able to manage on the interest rates? Because it was 9% plus earlier, right, during construction. I'm sure, I mean, given the fact that the asset is operational and then cash flow visibility is better and execution risk is taken care of, the number should ideally come down.
Right. So on the first annuity which will be received, we'll have a 0.25 automatic step down in the interest rate, whatever rate is there at that moment of time. And then we'll definitely try to finance it through somebody else with a lower rate. So the ballpark rate would be in the range of 8.75 to 8.5 to 8.75.
Sure, sir. Sure. Thank you. That's it from my end. Thank you.
Thank you. The next question is from the line of Parvez Akhtar from Edelweiss. Please go ahead.
Hi, sir. A couple of questions from my side. Considering that we still have to infuse almost like 430 odd crores equity in a HAM project, what is the kind of order intake that we will be comfortable in the HAM side going ahead?
We'll see presently existing equity definitely we have already arranged for a funded for with the opening cash balance and the execution which will happen, where cash will be generated which will be utilized for this project. So keeping a perspective of the profit will be generated over a period of time. I think so 3,000 crores of HAM projects should be sufficient, would be a good number where we will build and get, so that as much equity is available from our end also. And balance would be definitely will bid for EPC contract.
Okay. And so this quarter our equity infusion would have been, I think, only minimal, right? Only 15-20 odd crores. Is that number right?
Yeah, only 15 or I think it's quite small amount.
Sure. And last, sir, what would be, I mean, I know it's difficult to probably say at this point in time, but what is, let's say, our thought process about what could be the kind of debt levels at the end of FY21?
At the end of FY21, we should be approximately say around 5,000 around 6,000 odd crores.
And so at this loan level?
Pardon?
Debt at FY21 and at the standalone level, ABL level?
So this will be a debt drawn on the new HAM project, executing HAM projects. Also, but there will be repayment of debt on our BOT project. So we believe it should be around say 6,000 crores.
Sir, I was asking about at the standalone level.
At the standalone level, since the standalone level, we should be in the range of 500 odd crores last year's levels.
Sure, sir. Thanks. That's it from my side and all the best.
Thank you. The next question is from the line of Tejas Shah from Axis Bank. Please go ahead. Tejas, your line is in talk mode. You can go ahead, please. We would request you to please unmute yourself if muted from the handset.
Hello. Yeah, can you hear me?
Yes.
Yeah. Just wanted to understand what are the nature of impairment that you have booked in standalone and consolidated cash flow was close to over 55 crores.
Impairment in?
Yeah, so there is an item of impairment allowances of 14 crores and receivables written off of around 43 crores. So could you throw some light on this?
Impairment is ECL impairment which happens on debtors long time cost of money. That is a portion of 14 crores and 43 crores are certain receivables which we have provided for in a couple of projects which we expect to get returned, but this year as per the guidance from the auditors we have provided that 43 crores.
Okay.
Thank you. The next question is from the line of Mohit Kumar from IDFC Securities. Please go ahead. Mohit, your line is in talk mode. You can go ahead, please.
Hello. Thanks for the opportunity once again. Sir, my question is regarding this, the force majeure. Is it settled now? This is the political force majeure? I'm talking about COVID update. COVID.
For BOT projects?
Yes. In general, is this COVID classified as political force majeure or political force majeure?
So, as such, NHAI has not done any classification, but whatever relief they are guaranteeing is as per force majeure. The circulars indicate the relief, which indicate they are considering it as a political force majeure.
So, will you get the interest cost and the other
the various circulars which they have issued says will get the interest cost and O&M cost and extension in period.
Okay. And sir, is there any update on the CGD side which you can share about the revenue and top revenue and profit for the FY20 and FY21, how it is shaping up?
So, for this year, we could do a turnover of only 8 crores. This coming 2021, we expect around 50 crores of revenue with say around 20% of EBITDA margins in this year. Capitalization in this business could happen to the tune of around say 150 odd crores during 2021.
How is the progress in all the four geographical areas qualitatively? Is it
all the three projects? In the initial thrust will be on the transportation segment, and then later on we touch on the domestic as well as the industrial consumption.
Okay, understood. Thank you.
Thank you. The next question is from the line of Jiten Rushi from Axis Capital. Please go ahead.
Yeah, thank you for taking my question. Sir, I want to have the breakup of I want to have the enterprise value for the SBI Macquarie portfolio of 7 projects. That is the equity invested so far, plus the sub-debt for loss funding and the outstanding debt as on date, sir.
So, Can we take it offline because that would be quite bit of numbers.
No problem. So I don't want project wise. If you can give me the total numbers, also fine if it is possible. Otherwise, I will take it offline. No problem.
Yeah, I think we will take it offline.
And sir, the next question is on the arbitration which was going. So almost 5.5 billion of arbitration, of which 200 crore, as you said, with reconciliation. The one more project is still in arbitration. So what is the status of that, sir?
So we have applied all 4 projects for reconciliation.
Okay, all 4 projects. Okay. Yeah. And so the employee cost for this quarter was down. So if you see sequential, it has come down. So any reason for that, sir? Like why it was down? Because it was 42 crores this quarter. It was 53 crore in Q320. So they wanted to understand because of the any impact because of the COVID. Have you brought down the employee cost or you cut the employees cost or something like that? This should be the new normal.
Yeah. So in Q3 there was certain provisions for the year where the wage revision was effected in Q3. So that number looks a bit higher. Otherwise, it's a regular. There is no specific reason for up and down in the numbers. It's more of provision of Q1, Q2 division in salary which had happened in Q3.
Right. And the last question is the bank limits, the non-fund limit and the fund limit, and the percentage utilized so far.
So on the fund-based limit, we have around 350 crores, of which approximately, as of the date of the balance sheet, on the face of the balance sheet, there's a 40 crores utilization against which we definitely have cash available. But as on the last date of balance sheet, there was a 40 crores utilization. And on the non-fund based, we have a limit of around 3,550 crores, of which utilization would be to the tune of around 60%.
Okay, so fund based 40 crore is utilized and non